Welcome back to Believers IAS Academy, and in this today's topic of the day discussion, we will be discussing about the Monetary Policy Committee, which is very important as far as the examination is concerned, and also it becomes even more important because of the recent highlights that were given out by the RBI governor himself. And without any further delay, let's get into as to what the highlights was, and then also we will try and understand the working of Monetary Policy Committee in detail, right? So why is it in news? Why is Monetary Policy Committee is in news? Because of the governor himself, Mr. Sanjay Malhotra, who just recently updated that the repo rate will not be changed and kept at the same rate that it was before, which is 5.5%, which is the same which followed for the last three consecutive tenures, where it had changed back in the month of February. So the stance of RBI, which it says is currently neutral, right? So this is what the news is, and also it clearly stated about the changes with respect to the standard your SDF and the MSF rates, which RBI said has remained unchanged, right? Which means it is pretty much taking a very neutral stance. And also keep in mind, neutral stance doesn't mean that RBI will not intervene or will not change. It means that it could even increase the repo rate, or it could even decrease, or it could keep it just like that, right? So that is what neutral means. So now further, we will just try and understand what Monetary Policy Committee is as the agenda of this particular video today. So what is Monetary Policy Committee? It is a committee or a body consisting of 6 members from both the RBI and also the government. So we will try and understand the composition later, but in general, what what the Monetary Policy Committee is a body which consists of 6 members, both from the government and also the RBI, and this was created by amending the RBI Act 1934 in the year 2016. So this is also very important. So it is not a very old body that it was created. So the RBI Act 1934 was amended by a Finance Act in the year 2016, and then Monetary Policy Committee was created, and this was an alternative for a other body that was previously present, which we will see in further slides. So now, what is the main ambition or main aim agenda of this Monetary Policy Committee is to maintain price stability. Because for any developing nation, price stability matters a lot for the country, for its economy, and even for its people to not lose hope on the economy. So price stability or maintaining price stability is the primary function of Monetary Policy Committee in order to ensure that growth is not stalled or the growth is not affected. Now, further moving forward, we will try and understand the background as to what exactly made the constitution of this Monetary Policy Committee. So as we discussed, this was created mainly to control or to regulate the price factor in an economy, or so as to say, to adopt an inflation targeting monetary policy. So basically inflation targeting. So every year there is a target. In fact, once in every 5 years, the Monetary Policy Committee, in connection consonance with the government, sets a target. So right now, what is the target? The inflation targeting is around 4 plus or minus 2% is the present target, which means the RBI should ensure that the inflation rate does not go beyond 4, and also does not go beyond it does not go beyond 6, and it also does not go beyond 2. So this is the inflation targeting that the Monetary Policy Committee currently has, and this is also part of your price stability function of Monetary Policy Committee, which is also one of the important factor, also talking about the inflation targeting the target. And in order to make this a legal thing, RBI, as we discussed, the RBI Act 1934 was amended by the Finance Act 2016, and the creation of the framework was created for the Monetary Policy Committee. So now, what are the legal basis? Section 45 ZB is very important, because that is what was amended under the RBI Act. by the central government, where it authorizes the central government to create a member, a body, a 6-member body, which is called as the Monetary Policy Committee. Of course, these intricate details are not important for the examination, but it is good to know, right? Now, what are the main functions of or the purpose of Monetary Policy Committee? One, we discussed, it is to bring price stability in an economy, and a part of it is to ensure that inflation remains within the target that it has set, right? The range that we spoke about, which is 4% plus or minus 2%, right? So this is the primary function of the Monetary Policy Committee, and this is constituted to replace one that was previously functioning, which is the Technical Advisory Committee, which we had earlier, and the Monetary Policy Committee was replaced or was brought in to replace the Technical Advisory Committee model. So now, coming to the composition, as to who's part of or who constitutes or what are the members, who are those members who's part of the 6 members under the Monetary Policy Committee. The first and foremost thing we have to keep in mind that from the RBI we have 3 members, and also from the government we have 3 members. Of these 3 members, the first important member is the RBI governor himself, who is an ex officio chairman of the Monetary Policy Committee, followed by the deputy governor of RBI, who is in charge of the Monetary Policy Department, and also a one nominated member from the RBI board, part of the 3 members from the RBI family. Then 3 other executive members are appointed from the government side. So these are the 3 other executive members, and executive members doesn't mean that an MP or a civil servant or let's say a Rajya Sabha member can be a part of this. No, there are exceptions. So mostly it will be academicians, a person who is an expert in the economic field will be a part of the government side, the 3 people. But the exceptions here is MPs and even your executives, and even we can say civil servants, right? Government officials cannot be a part of RBI's Monetary Policy Committee. That is an exception. And also you have to keep in mind that these people are not allowed for re-elections. Like for example, they cannot be a part of the RBI Monetary Policy Committee once, after they have been appointed, they are not, eligible for the reappointment. That is also another important thing with respect to the composition. Now, understanding the tenure and the quorum of the Monetary Policy Committee member, so we have to understand that the external members, right, the members that we spoke about from the government, they serve a term of 4 years and are not eligible for reappointment, which we discussed just now. And the quorum, talking about the minimum number of people, the members required for any decision or any proceedings to happen, the minimum quorum is 4 members. And of this 4 members, right, 4 member is must, to hold a meeting, and amongst these 4 members, there has to be the governor. Governor should be there, governor or the deputy governor. In place of governor, let's say if is absent, or if the absence of governor is there, if the governor is not there, then deputy governor must be there. So amongst the 4 members quorum, the presence of governor or in place of governor, the deputy governor is a must and should factor. Now what about the voting, the decision making as to what is the consent that has been practiced? It's the majority vote. Simple, nothing else, nothing fancy, nothing complicated. It's just the majority vote. And during tie, whenever there is no consensus between a particular decision, usually the RBI governor has a casting vote. That is also very important, a point to remember. And above all the decisions made by the Monetary Policy Committee are binding on the Reserve Bank of India, which is also very important to keep in mind. So this is all for you to understand with respect to Monetary Policy Committee. Now let's kind of look at the present rates with respect to repo rate. So this is talking about the neutral stance as to what are the changes that the Monetary Policy Committee has brought in. So the repo rate hasn't changed; it has just been the same. and it also spoke about the standing deposit facility rate, which also is still the same, and it also had mentioned about the marginal standing facility, which also said it is still. So now, what is standing deposit facility? Standing deposit facility is that option where the banks can park their excess fund in the RBI without any collateral, right? And this usually, RBI does it to extract the extra, liquidity in the market, extra money in the market. So what is the rate? Rate is 5.25, which is slightly less than the repo rate. Always keep in mind. And there is another thing called as the marginal standing facility rate. This is like a penal rate, right? A penalty rate from the government, from the RBI on those banks. When they need money, they have to borrow, right? When they need money, when there is a need for any bank for running out their loans, they need that extra liquidity, extra cash. So that extra cash that they borrow from RBI, right? RBI puts a special rate to it, which is always above the repo rate. So this is one important thing to keep in mind, that the marginal standing facility rate is always higher than the repo rate, and this is a penalty rate, kind of a penalty rate on banks for taking that extra, extra funds or extra cash or whatever that is, right? So at current, this is 5.75, and what is the policy stance? It is neutral. Okay, so this is all that is important. And also talking about Monetary Policy Committee, there are different types of monetary policy, actions. We talk about one being the expansionary policy, where usually the repo rates are reduced. It is the expansionary model where the RBI reduces the repo rate to make sure that the borrowing cost is less, so that there are enough funds in the public, or let's say the interest rate of the banks that it charges on its customers is reduced, so that more number of people can come take loans, and further investments can happen, and it will kind of help the economy to grow. So that is the expansionary policy, where expansionary monetary policy where the repo rate is reduced. Then comes the contractionary, or we also call it dear money policy, dear monetary policy, where the rates are increased. This is to absorb the excess liquidity in the market. Simple, that's all. Right. So I think that is all for this particular video. Of course, from the exam point of view, there has to be few more details in terms of understanding, right? But for the general understanding as to what Monetary Policy Committee is, especially for a beginner, I think this video will be absolutely sufficient to give you a conceptual clarity as to what Monetary Policy Committee is, what repo rate is, standing deposit facility rate is, marginal rate. Of course, I think we forgot talking about the repo rate. What is the repo rate? Repo rate is the rate at which RBI lends to the banks, right? It is the rate at which RBI lends money to the banks. Of course, to going too much in detail, repo rate it is also called as repurchasing rate. Of course, we might have to do another video specifically to understand or to explain what the repurchase agreement in repo rate is. But for this particular video, just keep in mind that repo rate is the rate at which RBI lends its funds to the banks, right? Simple. So even before we end this video, we'll see a prelims question, which could be a possible question, may not be. Anyway, you can just pause the video, take a screenshot, and use the comment section below to leave out your answers. So I think that is all pretty much for this particular video today. I hope the concept as to what Monetary Policy Committee is kind of clear. And for more such informative videos like this, please do subscribe to Believers IAS YouTube channel. And signing off, this is Madan Gopal. Have a beautiful day.